course, slightly up last week on Friday, but really compared to the week before was down. Was this driven by local investors?
Well, it's probably a mix. We are starting to see the local institutional investors starting to come back to the market, and foreign investors have been participating in a good way over the last 1 or 2 months, and in a large part have been driving the market. But we are seeing increasing appetite for stocks for institutional investors, especially as they look to close their positions towards the end of the year.
And agricultural stocks seem to be the one sector where investors are really getting value. What specific stocks are you focusing on in this sector?
I mean, it's the story about the soft commodity prices have actually been performing very well, especially if you look at coffee and tea prices. And although the market has a number of small tea and coffee companies, we are seeing a bit of interest. The problem is that some of these companies are a bit too illiquid. But if you look at coffee, for example, we've had prices going up quite substantially, 60 to 100% of the last maybe 11 or 12 months. And production has also gone up by almost 50%. Tea prices, we've seen production coming down about 11%, but prices are also up close to 50%. And if you look at those factors, even from the interim earnings from two of the companies which released results about 2 weeks ago, Williamson and Kapchorua, earnings were up quite substantially. And of course, if you look at the other agricultural companies like Kakuzi, the half-year earnings were also quite good, and we expect the second half to also be relatively good.
Well, just looking at two of those tea stocks, Williamson and Kapchorua, as you mentioned, they're seeing their pre-tax profits soar in the first half, but a lot of people saying that they're expecting lower revenues in the second half because of lower sales and also higher wages and energy costs. How badly do you anticipate revenues to be affected?
I mean, the thing is, as long as they remain profitable, the valuations are already looking very reasonable. I mean, if you compare to the market where the PE is almost between around 10 or 12 forward PE, for the agriculturals, we are looking at a PE of about 4 or 5, so about half of the market. So even if you factor in a worse situation in the second half, and we are seeing prices of the commodity prices remaining well sustained, it's likely that we're generally going to see a good overall performance for the stocks, and given that they are well valued compared to the market.
Another stock in that sector that has been performing quite well is Mumias, up 3% on Friday. Do you expect further gains this week?
I mean, on a week-by-week basis, it's difficult to tell. It depends on the demand and supply, because at this time we don't have any market-moving information coming up. But the first half ends in December, so we'll be expecting the results up between end of January, February, thereabout. And the company started production of electricity this financial year. And I think we'll be watching to see what the impact of that is on the bottom line. Of course, there are other issues for the company, because we also have the COMESA duty-free period ending in 2012, and in terms of pricing of raw material, basically the cane, it's always been a debatable issue. But we've seen internationally sugar prices holding quite well, and we expect that to be good for the company, given Kenya is a high-cost production destination.
I want to move on to the currency, the shilling weakening quite a bit, mainly due to foreign activity as a result of that infrastructure bond. But I guess the slight drop in tea prices also affecting the currency there, or not?
Well, not really. I mean, if you notice, the Kenya currency has been trading within very narrow margins. I mean, it's held very well between 74, 75, and in the last 1 month. So I mean, it's just demand and supply. But at these levels, if you look, we are starting to build our reserves again from the previous lows. I think the central bank is comfortable with this level. And the demand is matching supply. I think we'll hold at these levels reasonably well.
Well, traders also saying that we're expecting upward pressure as a result of tourists coming into the market, remittances sent from Kenyans living abroad. This must have a positive impact for stocks like Kenya Airways.
Yeah, I mean, it's. I mean, Kenya Airways has different issues playing on it. We're expecting better performance for this year, especially for the period ending March. But you know, we're also looking at in terms of fuel cost. That's really been the driver for that stock, and you know, in terms of its hedging position, it basically wrote off most of its losses last year, and so this year, in terms of the P&L, that's going to be up reasonably well. But in terms of cash flows, they'll probably be worse off. So I mean, it'd probably be a mixed. The earnings really, it will be a mixed bag for the earnings. You will have the cash flow position worsening, but the P&L, the income statement will be positive.